following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends. We're up a little bit. Volume very light. What are we up? 8 points on 1.79 billion shares. So we're what? 400 million shares light of what we were when we started the show yesterday at this time. So a little lighter. Ended up with 3 billion and 3.1 billion shares yesterday. So very light move and break. The 2108 area has been fairly significant resistance for a long time. Even the volume over the last highs out here would suggest that certainly there's not a breakout coming. For the most part, we broke out of the lows and had higher volume. We're back into the trading range. We've had breakouts to the upside that have pushed us back in, and we've had breakdowns to the downside that have brought us back into this trading range. And I guess one thing that you can bet on is volatility, and that's nothing new. We've got the NASDAQ up 36 points, and we continue to watch what's going on. Got a lot of news happening in the world out here, and we'll talk about it a little bit. And as always, I like to start off the show with a little history.
And it's all just a little bit of history repeating.
With world events out here, I could not think of more history that is more apropos today than looking back at a book that became rather famous in July of 1940 called Guilty Men. The theory basically out there, and you've heard it before from Edwin Burke, was those who don't know history are doomed to repeat it. Of course, in the stock market, we're always looking for patterns that have happened before, and hopefully that they will come back again. Hopefully this is not a pattern that will. Guilty Men was a British book written under the pseudonym Cato and published in July of 1940. It attacked 15 public figures for their failed policies toward Germany and their failure to equip the British armed forces adequately. In fact, they were working very, very hard to make sure that the British Isles could not defend themselves. They did not want Britain to get back into any wars on European soil. This is the classic denunciation of appeasement, which is defined as the deliberate surrender of small nations in the face of Hitler's blatant bullying. And the question is, are we seeing history once more repeat itself? Last time, it was very interesting if you read the history books about Winston Churchill and him being right on just about everything. But, of course, he was drowned out by those who called him that he wanted to kill everybody and he was horrible and everything else. Of course, that ended up in a conflagration with 70 million dead. And, of course, none of these guys that decided that it was okay just to lay down and let Hitler do his thing. And, of course, it didn't matter if they threw a few Poles under the bus, Jews, whoever it was, as long as we don't have to get involved in it. And the question is, are we not back to that all over again with Poland and a lot of other small countries now in the seat of those in the Mideast? And very closely, will history repeat itself again? History is not kind to being weak in the face of insane and nutty people. But, of course, the question is whether or not the Saudis, the Israelis will put up with it. We as a nation could probably live through a nuclear attack if it was small enough. They could not. One bomb is enough to end either one of their countries. And the question is, can they accept that kind of risk? Easy enough for us to say we can. Very tough for other countries to say the same. And that is the heart of asymmetrical risk. If we now go from the world events to stock markets, the idea of being able to take any bet that could end everything in the stock market is not worth it. That is one of my favorite books called Fooled by Randomness. And that was, especially in the stock market, people continuing to make bigger and bigger and bigger bets until they make one, and any kind of movement at all wipes them out. Normally, those people are willing and do make several bets like that. They become famous, and they make one more bet, and pretty soon they're on the unemployment line, and they are bankrupt. So the question is, are we looking at 1938 and the day of appeasement, as it's called? Peace in our time, as Neville Chamberlain called it. All I can say is, if you're wrong on this, boy, you are betting a lot of other people's lives out here, and that's all I can say about that. Other things going on in the market, DAX up 0.25%, FTSE up 0.25%, CAC up 0.7. Asia up 1.4% in the Nikkei, the Shanghai down 1.1%, Hang Seng off 0.4%. I suspect that we're going to see continued slight selling for a long time in the Asian markets. Who wants to get in there and see that tomorrow that anybody with 2.5% can't sell any shares? Of course, we are still at 52% of the market not trading, and that is 1,300 stocks in the China markets that are not trading. So is there a real market? I did hear somebody that did have a good point today, and that is, can we in the U.S. act any different, that we are any less manipulating the markets than China? And I had to think about it for a while. Probably a little less, but I don't think we're without sin on that either. Anyway, the Greek exit, the finance minister for Germany was out today. He's well known for speaking his mind. Said today that the Greeks would be much better off leaving the EU, and he didn't know why that they were sticking in. Of course, that's not going to make it any easier for the Greek prime minister to get it through the votes on Thursday. It does look like they have the votes in Germany. It does not look like they have the votes in enough of the other countries right now in the EU to get it through. So the first hurdle is going to be the Greeks on Thursday. And if they get through, then we will have to look at seeing whether the EU people come through by Monday of next week. And if so, I will lose my bet to Andy Heck. But we haven't crossed that bridge quite yet. Of course, anytime you're at highs, there's always a lot of fraud. Today, the first fraud I want to talk about is Twitter. And, of course, CNBC reported that they had a $31 billion takeover bid sent to them, sent shares up more than actually 10% at one point when I was watching them. Twitter and elsewhere suggested it was fake, sending the shares right back to where they had taken off from, about $1.25 lower. And again, this one was a better lie than we've seen in the last couple of months for these to come out, because it was more believable, at least on the small side of it, in that there was only about a $3 or $4 billion premium to taking them over by some unknown company in China. Of course, there's another fraud out here today, and it's not being pulled back because it's a lot harder to figure out whether it's a fraud or not. I suspect that it truly is. One of the Chinese companies said that it wants to buy Micron The only problem is that in previous editions where people wanted to buy Micron, it is the only memory manufacturer in the United States. And guess what? The government's already said that it's not for sale. So anybody coming by and doing a nice little drive-by and saying, I want to buy you, maybe they just bought calls on it and decided to juice it today, because we already know that the government has said no, 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 and they've said no a ton of times over the last 20 years. It's not for sale to any foreign companies, and still not for sale. It may be worth more money, but it is not for sale. So as far as I'm concerned, my guess is I'd love to see who had bought calls in this just before this news came out in China. I'm sure there's a lot of funny business going on in these markets right now. Retail sales were down to 0.3 from May, seasonally adjusted, and sales were up 1.4% from June to 2014. But of course, they were looking up for 0.1%, and down 0.3 is not good news. What else is going on? Recession and deflation. We now know that the UK and Finland are in a recession and in deflation. Consumer prices fell back to zero in June as shops began their summer sales, and no one showed up. So we've already got at least a part of the euro already in both a recession and deflation. So keep an eye on at least those Western European countries. After the bell tonight, we've got CSS Corp, LLSV, which is Las Vegas Sands, and Yum Brands. In the morning, BlackRock and Delta Airlines. And after the bell tomorrow night, Intel and Netflix. Very interesting. I was going to breakfast probably about 7:30 this morning, maybe 7:15, and turned on the AM radio. And I didn't even know the radios had AM anymore. Anyway, I left my phone at home, so I wasn't able to listen to something else. So turned on the AM radio, and there was somebody on the local radio station that was basically saying Amazon and Netflix were pyramid schemes. And I thought this very interesting on an AM radio station doing the news. It was an opinion piece, but very interesting to hear this gentleman. I don't know who it was, and I wasn't able to find it, or I would have played it back. But basically, he's saying, you know, Amazon, they're just pyramiding bigger and bigger. It runs on 0.2% for profit margins. And the only way you can continue to do that is get more and more customers then and have more and more cash flow. Basically, he said the same argument. This was a non-stock guy, which I thought very interesting. He also said the same thing about Netflix. As soon as they peak with the amount of Prime customers for Amazon and the amount of subscribers for Netflix, he says the jig will be up. It is a pyramid scheme. And I had to think about it for a while. Neither company really makes money. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we have Mike in Ormond Beach. How you doing today, Mike?
Pretty good, Dave. Great show. I listen to you as often as I can. I usually work a lot, but last couple of days I got to listen to your show, and I heard you thinking that, we should get some kind of a decent pullback, possibly, between maybe now and September. And I was wondering if you thought now might be a good time to scale into the DXD.
No. And
okay.
I don't think it's ever a good time to be in the Dow.
Okay.
And I will tell you why. One, it is not representative of anything. It is 30 stocks that are 95% institutionally owned. And if they all have to sell, it's going to get crushed. If they all want to buy, it's going to go up. And it has nothing to do with either the economy or anything else other than what a handful of people on Wall Street want to do.
Mm-hmm.
It's kind of like asking 30 people who's going to be the next president. Probably not real representative of what's going on.
Right.
I would look at, if I'm looking at any indexes at all that are representative and actually correlate to anything in the marketplace, it's going to be the S&P 500, the Russell, something that's got a lot of shares in it.
Right.
And to me, the Dow is more than anything noise.
Right.
That is a distraction to what really is happening out there. It's the keys jiggling in front of the baby saying, hey, look over here, look over here.
Right.
Because again, like I said, every fund has to have the Dow stocks in it. Every fund has to be everything else, and 95% of them are institutionally owned. When one share comes out, someone else is going to buy it, and unless huge redemptions in funds come in,
Yeah.
you're not going to make a lot of money, even though you're right.
Okay. Well, in
So-
that case, what about the SDS?
I would say that was probably a great bet out here. Risk reward does not get any better than it is right now. We have 1.885 billion shares on the NYSE, and there's a very high correlation to low volume and highs in the market. And, you know, we've come back. If you listen to this show for the last couple of months, we've been talking about 2108 is this line where every time it got up here, everything fell out in volume. It's now 2070 where we end up having the same kind of light volume. So I'm suspecting you've got a very, very high probability. You're going to know that you're right or wrong almost instantly. Let me put it that way.
Yeah. And,
So that's always great.
okay. And again, I caught bits of your show, and I know how do you think this will play out in your opinion between now and September?
I think, and I've said it for a while, that it's going to be, you know, 2 steps forward, 3 steps back, 2 steps forward, 3 steps back.
Okay.
And to me, like I said, I've bought September and October and November puts because it's very tough to know exactly when the spine of anything like this is going to bust.
Yeah.
I'm not telling you that it will be tomorrow. I will say, though, that I've got a model, and the model has worked pretty well in the past.
Mm-hmm.
And that model does say that just like hurricanes are likely for the next 3 months or 4 months down here in Florida, the opportunity for a huge downside day gap away is extremely good. In fact, it's better than it's been in several years.
Okay.
So the opportunity for something coming, a rogue wave, as they call it sometimes, coming out of nowhere certainly exists. Does not mean you're going to get one. It's like a hurricane. A lot of things have to go right, but don't see hurricanes in the middle of the winter. And right now, it's certainly all the conditions are right. Normally, what I'm looking for is heavy bullishness, almost no shorts, which is what we have now. They've just been run out.
Uh-huh.
And the belief that the stock market only goes higher. And normally you see things like Netflix, the stocks that run, there's always one, in this case it's Netflix, that run to the moon. And, you know, maybe a couple, 3 or 4, but Netflix probably a good example. And there's just no rhyme or reason. And that's a good sign that a lot of gamblers in.
Mm-hmm.
And normally they get the exact same treatment we've seen in China over the last 3 months, where you get a 30 or 40% pullback.
Okay.
And everybody is scratching their head and can't figure out why. But that is the heart of the euphoric episode.
Okay, well, thanks.
You bet. Yeah, I think risk reward here for positions, long or short, does not get any better. Either you're going to break out or you're going to fail. And it's probably going to be rather big. Now, we may not have that till next week. I'll explain that when we come back.
Okay, thank you.
Okay.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Do we still have the caller online? I think he dropped, didn't he? Mike? No, we don't. Okay. What I was going to say is that it certainly looks like the people are trying to lock up 2,100 for the expiration on Friday on the S&P cash. And why we're 10 points higher than that, we could pull back a little, but it's really looking like they're trying to make the Great Wall of China stick at about 2,100 for expiration. We're kind of high out here. Probably have still a few nagging shorts that they think will cover, and they'll be able to show the shares too. But, you know, we just continue to have super light volume out here. So my guess is that even why today may be a great chance to start pulling the trigger, probably not going to see big movement in this market until next week. 1.93 billion shares as we speak. So volume very light as we're up another 10 points at the highs today, 21.10. So anyway, just looking at those. But yeah, the risk reward probably this does not get any better than this with super light volume and a move higher and high volume lows everywhere we look around. So I don't know what else you can say about. That's all I got to say about that. As they would say. Let me get back out here to look at some there. That's not it. Oh, think I made a mistake. Let me get this ready and play. And we'll look at some other stocks of interest out here. Let's see, let me get my notes ready. There we go. I just put them in the wrong place. WDAY, which is workday, up 3%, upgraded. Again, this thing, and a lot of these stocks just coming back up to resistance levels. On this one, you'd probably want to see if you could pull the trigger somewhere around that $88 level and fill half of that gap down that happened on May 27th. You had 9.3 million shares that day. We've got 1.4 million as we approach that gap. Most of these gaps, though, have been being filled by maybe about half. Now, we're going up against that candle already. If the market does turn down, that's probably all you're going to get. But pretty good indication that 1.4 million shares against 9.3 million shares is not going to take you all that far. Other moves out here is HOG. If you like riding loud motorcycles, not fast ones. I'm more of a Japanese and Italian motorcycle fan. Harley Davidson gave back about half of its pop up today already. At the highs, it was up about 2.5%. But not a lot of volume, and you can start making cases out here that maybe we've got some ABC downs in this. This one's much like the one we talked about in Workday. It had a huge gap down with 15.5 million shares. That gap goes back to the 21st of April. You got back into it, started to fill this gap a little bit. In fact, you did basically that. You filled about half of it, and that's where these things start doing fairly well. In fact, you basically came into it with 7 million shares against that 15 million shares. So you probably know that you're not going to get much more out of it. Could have this gotten to $60? I would have liked a short there a little bit better. Back down to $54.27. No real energy the last few days back up here. That we gave half of that back. Probably not a big deal. What do we have for expansions? Let's look back here just a little bit more. Which one do I want? There it is. Yeah, this kind of got up through the 618, which would have been $57.10. Not to 58.22, but it's kind of back there. It's not uncommon to see these things blow through a lot of the highs. Huge call volume today. Someone thinks they know something. FAST, Fastenal Systems. Of course, this is a really good window into what's happening in the Rust Belt of America. They sell nuts and bolts if you're not familiar with them. And these guys are down fairly strong. Reported Q through earnings of 48 cents per share, 2 cents better than estimates, but light on revenues. And this is pretty much what we're looking at already. In fact, WFC is another one out here. Let's take a quick look at it. It was up a little bit, but it was another one out here that same thing, which is you had your earnings, and yeah, it's a little higher. And yeah, light on revenues, but doesn't really matter because it's financial. And of course, to CNBC, you must be buying financials out here. To me, this thing only completed a possible ABC down right now. And let's see what we have out here for retracements. This did come right back into its Gartley, or not its Gartley, but its confluence pattern almost perfectly. That confluence pattern was at $55.19. Was that what? Yeah, $55.19 to $55.25. And we got to 55.08, turned right around on it. So you've got your pullback. You got back up to the 618 in this. Volume is not very exciting. So you can make a good case that you are ready for an ABC down on this. And let me see out here if that's our A. And 55.08 is our B. And today is our C pattern. Then we did a retracement a little more than the 720, and that would take you back down to $54.19. And that would be interesting, but certainly not a lot of juice on those earnings. And when you look at them again, light on revenues. And in the interviews this morning, Wells Fargo was saying that they are passing on a great deal more loans. So that would be interesting. We've got people asking in the den for some stuff. GoPro, GPRO. So we'll take a quick look at that. Little pop out here today. The problem with GoPro is there's still not enough shares out there in the float. They can do anything with this stock that they want to within reason. My guess, though, is it's going to be a while until the truth of the matter is out here, and that is that these guys make video cameras. Those video cameras should be getting much lower margins than they get now. And it's kind of tough to do that. GoPro, nice bounce out here. Of course, it was upgraded by Barclays today, so that doesn't mean a hill of beans other than they're probably trying to get this thing to expire somewhere around that $55 level because they probably are the option market maker on that, and they would like nothing more than to do that. Let me see what options are saying about GoPro out here. Yeah, they're going to try to push GoPro to $55 for options expiration. And why the downside is a little bit more out here, the high short interest in that would probably make the sweet spot for option market makers to have this thing at about 55. What else do we have? Mohawk Carpets, MHK, of course. This one is so owned by Mr. Buffett that I don't know if there's any way to actually make this company go down. He has done everything but buy every last share out of this company. So I don't know what you can say. Market depends on having a lot of people in it. This is a company that is hugely owned by a handful of people, and can they mark it up to any price? The question is, what's this going to look like when they all go to sell it? One thing I dislike about it is we never really did have the sign of strength out here that you would expect in a stock that broke out of this 188 highs from March 31st and March 2nd. So not a lot in that one so far. See, we have any other questions out here in the den? You can always email me at path@tfnn.com, and I'd be glad to answer your emails there. And let me actually check them. Okay. What else do I have out here? Okay. Got a bunch of stuff on my screen, so give me just a minute to organize this stuff out. Okay. Let's go back to Fastenal. EMC off 3%. The big manufacturer of data systems storage was downgraded. This one's down and has some decent volume, but the question is whether or not it's going to get 27 million shares today. Needed $25.07, which it hadn't gotten to. It needs 27 million shares, but looks like this one may get into that low with that low of volume. Anyway, EMC at $25. Of course, you've got SDX reporting tomorrow. So let's take a quick look at that one. This one's had a little bounce out here. We were short in the Tech Insider WDC and got out at the end of last week. We were short about, this is about the third time I think we've shorted it in the Tech Insider, but we got out at, 78 or so, 77, 78. And this had a little bounce out of here. None of these look that good, and I think that there's compelling reasons to suspect much lower. My guess is that the downside's a little bit advanced in these companies. We're probably going to get a little bit of a bounce. So we'll look at that. Could be a little bounce. It may just be a little oversold. But the energy, especially in Western Digital and Seagate, let's go back to those, has been heavy. So maybe you get your 50% bounce out of those things and you get to pull the trigger on them again. At least that's what I'm hoping for. What else do we have out here? GoPro, Box. Box is another one of these sliver IPOs. It's up a lot, but when you don't have more than 5 shares trading, is it really tough to figure out what these things are doing? They had a big presentation. Jim Cramer decided to give them a wonderful boost on his show last night.
Bring me the head of the false prophet, Jim Cramer.
Of course, they don't have any shares, so anybody stepping into buying this would make a fairly decent, significant move in this. So we'll do that. Box is cloud storage. EMC sells to people like Box. There's a question in the den about what's the difference between EMC and Box. EMC basically makes big, huge boxes to put hard drives in and make sure that they don't fail, or when they do fail, you just pull one drive out, put another one in. So EMC buys from Western Digital, buys from Seagate. They put all those drives together and they make a specialized controller that hooks to a network, and that network then hooks to something like the Box Cloud system. And it's just this endless food chain of the drive manufacturers to the storage manufacturers like EMC to the cloud services company like Box. Now, one of the things that makes me think Box is close to probably dead and EMC probably not doing a whole lot better is the ability for most of these major companies like Amazon with Amazon Cloud Services to really build all their own stuff internally. They have such scale that they're building their own stuff to their own specifications. And since it's their own cloud services. Same thing with Microsoft. Microsoft and Google, both in their cloud services, have adopted a policy of building all their own stuff in semi-rigs. And literally, they got a giant building that's air-conditioned, and they just keep backing these semi-rigs in different parking spots in this giant warehouse, and all the cables are there. So if that particular thing needs to be serviced, they hook up a semi to it, they pull it out, they back one in, and that semi's loaded with all the computers and servers and stuff, and they just hook it up to the cables right there, and that's it. They haul the other one away, they service it, maintain it, change drives out of it, and that semi-load worth of computerdom comes right back. But both Amazon and Microsoft I've seen adopt these giant server farms that are nothing but containerized, let me put it that way, containerized systems that are dragged in and around in giant warehouses with semis, literally. It's kind of a very interesting idea how they did it. But it is interesting. What else do we have out here? EXH announced its board has established a distribution date for the spinoff of its international services and fabrication business, and doesn't say when it's going to be, but it is a nice bounce out here in Extran Holdings. Let's see what they do. I kind of vaguely remember this company, but not well enough to go after it. Together with its subsidiaries, provides operations, maintenance, service, and equipment in the oil and natural gas production, processing, and transportation applications. We'll have to see what they're spinning out of this and whether or not it might be a good buy mid-August out here for maybe the usual pump in natural gas prices. Probably going to happen in a few weeks. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had an email about what's going on with Google, and I guess they show after the bell tonight. So well, that will be very interesting. I didn't see it earlier today, but certainly they're out there. Let me see. On my list, it's supposed to be a G out here somewhere. Is that right? Googl? No, the 16th. Okay. That makes a lot more sense. Okay. Had a question in here on the email from Ron. Ron didn't say where he was from, about what options look like for Google. And this is one of the widest ones out here as far as what it looks. But this is a good example of what and when option market makers and the street has absolutely no idea what the price of your stock's going to be after earnings. And if you look at this, this is a chart of how the cash comes in and out. In fact, until you get down to 485, you really don't see cash really starting to build on Google, and the options really don't turn until above 570 for the calls. So, you're basically, they've got a huge amount of downside and some fairly significant $20-30 on upside before a lot of cash starts coming in. And that is the problem right now. We see a lot of movement in this market. And of course, we're at 2110 on the S&P cash, up 10.75% with no volume over the last hour. 2.0, let's call it 2.05 billion shares. So it looks like we're teed up for earnings. And we'll talk about that just a little bit before we go and see if I have any more people asking for anything. That was one thing. Anyway, a couple other things that are interesting. We were talking about Domino's. Wanted to follow up on that for Kevin. And this did pop. You wanted 1.1 million shares. You got 700,000 as it broke above the previous high yesterday. Today, it is pulling back a little. And just so many of these stocks are like this, kind of like the entire market out here. We get to the highs, they try to break out, not enough volume, pops back into the trading range. I suspect that's what's going to happen with Domino's. Same thing at the bottoms. We see a lot of these stocks, heavy volume on the bottom, and they pop back into the trading range. So that's part of that. Anyway, we've got a lot of earnings out here, and God bless you. This is a quote from last earnings cycle.
It's just a fact that they say the median stock in the S&P 500 right now is trading at 18 times forward earnings.
Right.
That's in the 99th percentile of the last 40 years. I mean, it's hard to argue with the facts on that.
Right.
Anyway, we played that one last time. More interestingly enough, because so many stocks came back down, yet the index is back up here for earnings. We're now looking at about 21 for the earnings per share. And it's not just 40 years now. Now it's like 55 years. So if you want to buy a market at the top and with stocks as expensive as they ever were, doesn't mean that they can't go and be more expensive. But if you want to buy at the top, more power to you. But as they say on the trading floors of Wall Street, if you're not buying the highs, you're just not trying. And I won't be one of those people doing that. Anyway, we'll see you tomorrow. Same bat channel, same bat time. And so when you can, not when you have to. Hang on for Tom O'Brien for the next 2 hours. And then Mr. Andy Heck at the 5 o'clock hour. See you later.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.